Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good afternoon and good weekend. Ira Epstein of Linden Associates with your weekend update of the agriculture markets for this Friday, the 28th of April, 2017. Well, we had the end of a month, an interesting month. I would think that traders will be talking that probably the best gainers we've seen recently has been the cattle market. Grain markets seem to be just stuck in sideways action temporarily, but the charts have different stories, so let's go to them. This is the soybean chart. It's the monthly chart, not the weekly. We're going to show the weekly charts throughout the weekly edition. We don't go to the daily charts, but this is the monthly. And as you can see for the month, you've got a big downtrend line here. For a while, I was showing you a triangle that had formed, but the market has broken out to the downside of that. So I would think that rallies back into the low 1020 area probably encounter a lot of resistance if you get there. And I'm not saying it's going there. You're at 945, down 3/4 for the week, just haven't done much with the market. The low close on the current break, and remember, this is now a soybean weekly chart, for the year is 942 on a closing basis. We closed this week at 45 1/4. The market, as you can see on the weekly chart, when you just go to the bar chart part, has been coming down, and suddenly for the past 3 weeks, a lot of sideways action right here. As we take a look at the swing line study, this is the chart without it, and here it comes with it. You've got a clear pattern of lower peak highs, lower lows. What the swing line does is it looks at the market at the current day and determines via a formula I created, if it's a higher high day, where does the line go? A lower and low day? Is it an inside day? Is it a market that has an outside day up or down? I set up a set of rules for all that, and it helps formulate this so you're not guessing where to do it. It's all done by just putting the study on the chart. When you take a look at moving averages, we have a bearish configuration, or do we? Not a real one. Here's why. The shorter term average, the 18-week moving average of closes, is above the 100-week. So that's not a bearish configuration. Bearish configuration would be the shortest term average, and then above it the medium term, and then the longer term. This is a flip-flop of that, but because the market is under both, it still has downside bias. Let's look at it that way. And rallies back into 969.5 would be the first resistance zone in terms of moving averages. If that were cleared, you'd then be looking at the $10 level. In terms of Bollinger Bands, you have gone from the upper band back here at the very beginning of January, if you will, fell to the lower band last week, back up and over it, and sort of going sideways. Is the market looking like it wants to head lower? Well, at this point, because the swing line is down, market under those averages, the answer is yes. The market also has locked-in momentum. It's just going sideways in the slow stochastics, staying under 20, so the bear play is locked in on these charts. While the daily charts can point to small rallies, this has not left that configuration. In the soybean meal chart, it's interesting when you look at the sideways moves right through here, because it gives you a different pattern than the daily chart. The daily chart actually threw out buy signals today. This chart is still holding sell signals. They would get together if the market went over 319.40 and closed over the 18-week moving average of 324.70. Barring that, all that you look for is resistance between the 318 level, which is the 100-week moving average of closes, and the 18-week at 324.70. So rallies could be contained there. Momentum is still pointing down in the market. In the soybean oil market, we've had a bounce over the past couple of weeks back to the 100-week moving average. Momentum is laid down and just locked into a bearish phase. The pattern is one of lower highs, lower lows. We've had a rally, but it can fail at any point here. There is nothing bullish on this chart at all, still all bearish. Then we get to the corn market, which has seen the convergence practically of the 100-week and the 18-week moving average of closes, coming in between 363 and a quarter, 365. And how often has the market hit that? Now, just give you an idea. Those two numbers have been hit every week from 1, 2, 3, 4, 5, 6, 7, 8. 2 months. So all of March, all of April, you've hit both numbers and you're still laying down, but the pattern is one of higher lows and higher highs. So you have a market that is not, if you will, got itself in terms of both parts of the trend and the bias being together. The bias is down because you're under the 18-week and 100-week moving average of closes, but the trend is up because the swing line has the bullish pattern and the momentum is still laying down. If the market takes out this low here of 354 and a quarter, then the pattern will be one of lower highs, lower lows, into the lower Bollinger Band of 350 and a quarter, where I'd be looking for support to show up. In the wheat market, you came from the upper Bollinger Band in February and finally got down to the lower Bollinger Band and getting thrown back. Now, what's the importance of the Bollinger Band with that, the black dashed lines? Keep in the back of your mind that what they are theoretical support and resistance points, as this algorithm is designed to keep the market trading within it 95% of the time. So as the market got up here and looked very bullish, well, it even got up to the 100-week average. It fell back, went back home to roost at the 18-week average of closes, that line in the sand as I like to call it, and then the market decided to break out to the downside, went down the past 2 weeks and finally getting a bounce. Momentum down, you could say it's oversold. In the cocoa market, this is what you call one of these ugly type of chart actions, because on the weekly, you get all the way up to 2187 and then you drop 300 points roughly to 1805, hold the lower Bollinger Band and just sort of trading against it. The bias is down, the swing line itself is not trending, and momentum is still pointing down. In the sugar market, today's action was interesting because the market was up rather dramatically today. On the daily charts, probably up 60 to 70 points. And what's been happening with the expiration of the March contract and the May, now we're not into the May contract expiring, but deliveries are beginning, is that there's been 1 to 3 firms that have stood up each time that this has happened, and they've taken all the deliveries that are thrown at them. And that gets the market to rally a bit, but each of those rallies, if you take a look, are short-lived, and then the markets continue to fall down. I don't know that the pattern's not going to change this time. You'd have to get over 1716 to break the bear pattern that began right here when you started making the lower highs and lower lows. Resistance 1666, momentum locked into the downside. Coffee market. All it's done is rallied back to the 18-week moving average of closes, and then went down to the 100 and sliced right through it on this particular time. So you have a market that's reaching lower and lower. Momentum is still pointing down on this chart, and it's riding the lower Bollinger Band. There is nothing friendly on this chart at all other than prices are low. That's all you can say. The cotton market has gone from the 18-week average when it had an uptrend. It lost it, came down here, got its footing over 3 weeks. This week, not the week we're in, the week before, the here and here, and managed to then start spiking back over this high up to the upper Bollinger Band for its resistance point. You would call the momentum still up in this market, down here the same, so the bias is up. You're not trending on the swing line. The cattle market has not wanted to get under this 18-week moving average since November. Yeah, last November. And ever since President Trump met with the president of China, and the president of China said they're going to allow imports of beef. This market has been running to the upside. There's no reason to think it's over yet. Yes, it's over the upper Bollinger Band, and it can stay over it another week or two, but when it pulls back, it'll have support between the combination of the 100-week average and the 18-week average of closes. Still a bullish market. The hog market's not in that camp. The hog market rallied back to and ran into the resistance points of the 18-week and the 100-week average between 66.90 and 66.80. And here you are around 66.97, so you're right there. Momentum is trying to pick up on the chart. So it's interesting that it's trying to cross over that right now. Maybe it's going to follow the cattle a bit higher. We'll see if that all comes together. Now, you hear me talking moving averages, you see me talking these oscillators. Do you know what they do? Maybe not. So with the help of Modern Trader magazine, they have a PDF on this called Guide to Technical Indicators. And let me tell you something I'm building. I know a lot of you like to watch videos, so I'm putting together a library, video library, of technical indicators, explaining them, and so on. But nothing goes better than first reading a bit about it, and then I'll take you into the library. The library of video ones are not ready yet. But to get these, all you need to do is call us. Go to our website. They come via email as a PDF to you. We'll get it right out to you. Underneath me, you'll see on a number of websites, click here for Ira's free offers. Just click that. The form will pop up. And or if you're watching on YouTube, click right up here. We'll get them. We have 2 guides to technical indicators, volumes 1 and 2. You'll be getting both. I'm Ira Epstein. You have a great weekend. I'll see you all Monday.